All right, to discuss more, we are now be joined by Dr. Andrew Ferris, who is the CEO of Ecognosis Advisory Limited, who is now joining us live from Hong Kong. Welcome to the broadcast.
Welcome. Thank you.
Well, let me begin by asking you, with stocks recovering, what is your outlook for the risk assets this week?
Grim. Actually, it is just not true. I mean, I'm getting quite upset because I've got my Bloomberg screen on, and the nonsense that they have recovered all their losses, okay, since February, it is just absolutely not true. Okay, since Liberation Day, the stocks were down 10%, and now they are down 2.4%, so they have recovered 6%. They're not anywhere near at their heights before all this has started. So let's move away from the idea that they are back where they were. Actually, the back where they were depends where you begin to put your finger on the graph. And that can be very, very selective. We have, in addition to that, we have the minus 0.3 percentage point, basis points, 30 basis points decline in the American GDP, which is easily explainable away, except there is absolutely no guarantee that the second quarter may also be negative, in which case you'll have two back-to-back quarter-on-quarter negatives, and hello, that is meant to be a recession. So how can I possibly be cheerful about this complete nonsense? The other thing is to ask, what has changed since Liberation Day? The answer is a few adjustments to some of the selective increases in tariffs. For example, relieving tariffs from some of the electronic goods, and also some of the tariffs on parts and cars. Everything else has remained the same till I think the 8th of July, which is the 90 days, let's say, ceasefire that Trump has declared. Has anything else changed? No. So why on earth the markets are so happy about this? I have no idea. So the answer is no, I don't expect. I expect this increase, the recent increase in stocks, to be simply temporary. And my advice to my clients is keep out of American stocks, especially technology. And I'll tell you which stocks I am buying for my clients.
All right, interesting. Well, hard economic data points to a slowdown in the U.S. even before the larger reciprocal tariffs kicking. Well, that being said, how do you see this all play out?
I just told you, grim. Sorry, I don't want to repeat myself. Okay, you're asking me how it's playing out. The increase in the stock markets we have seen, it's illusory. It's based absolutely on nothing, and it has not recovered the losses since February. Full stop.
All right. Well, gold has lost its shine in the last few days. What is your outlook for the yellow metal then?
Simply explains and supports my notion. The idea is that you go into gold, okay, when you expect that things are going to be bad, and presumably you leave gold when you expect that things are going to get better. Now, if in fact people are leaving gold because they expect things to get better, then again, that's a false movement. What can I do about it?
Well, moving forward, I'm hoping that, or I do believe you have been keeping track of the Indo-Pak tensions. Just recently we heard that Pakistan announced a ban on Indian-flagged vessels from docking at its port, something that India had announced yesterday. Looking at all the tensions that's building up, what impact will the escalations have on stocks from both the countries?
Well, let me shout it loud and clear. I'm afraid it is not either a popular or a humanistic approach to investing, but it is a realistic one. I have been bullish on defense stocks since the outbreak of the war in Ukraine, and that is 3 years ago, and I have not changed one bit. Since the election of Trump, defense stocks, both in Asia, and that includes India, I repeat that includes India, and in Europe and in the United States, have outperformed the S&P. Why? Because wars continue. Even if the Ukraine war supposedly stops, and there is no sign of it at all of this is happening, and as the tensions between India and Pakistan increase, this means that India will continue, as it should, spend a lot more money on its defense position, and that is all very good for defense stocks. I'm sorry, It is true. I know I'm asking my clients to buy companies that produce goods that kill people and destroy things. Yeah, I know it sounds very horrible, but that's the reality of the situation.
Well, of course, I'm sure you're not wrong there because it is the reality. But thank you so much for joining us on the show and giving your perspective.
It's a pleasure.